Today's session, we're just gonna keep it really, really short and simple today. Yeah, really, really short and simple, short and sweet. We're gonna finish everything in 1 hour time, if we can. All right. So we have Rohana, we have Mario saying hi, we have Eon, we have Evelyn. Nice, awesome, beautiful people. So welcome home, everyone. Today's session is very simple. Today we're just going to talk about three things. First, what's going to happen to the market right now. As you can see, the market has actually been doing really, really, really well. So people who already hold some stocks, as we already told you long time ago, if you bought any stocks that is not using leverage, you really want to buy them forever. No matter what happened to the economy, you don't really want to sell them because eventually stocks always go up higher or big time. For those who just started as well, obviously you might not have chance for just started today, started yesterday, started last week and stuff like that. You might not have chance to buy the market right now because it's very expensive. But as you know, life is I have been in the market for more than long time. The stock market has been there for more than a thousands, for many years, and always there's always chance for things to come into your way. There's always chance for it to come into your way. I talked about last week. When it comes to your way, you got to do two things. Why? What you got to do, you got to prepare. You got to make sure when it comes, you got to be ready. You got to learn the strategies. Make sure it's step by step, doing really well. And you got to have your one-to-one, so yeah, you know exactly when that happened, you know what to buy, you know what to sell. And then on top of that, when it comes, you could just got to take a leap of faith and just go all in, despite very fearful. Because if you know, when you want to buy stock, things are very scared, things are very fearful. Anyway, coming back right now, and as you said many times, to be successful in life is not how intelligent you are, it's not how smart you are, because smart people normally don't do well because they over analysis paralysis, because there's always reasons why the stock market will not do well. There's always reason. Oh, Donald Trump is coming. Donald Trump is sending these navy, these fire troops, is sending all these real people to kill, to launch his fire guns. You always have these bad news always happen. Oh, Ukraine is fighting, whatever. Bad news always sells papers. You always have bad news happen. But so it's not intelligent people who make money. It's just people who are willing to risk it, literally. Now, I'm going to share my screen right now. So what I'm going to do right now, I am going to talk about what I'm going to do right now. I am going to, oh my God, I'm going to, excuse me, I'm going to talk about some, we're going to talk about the stock market right now. So as I show you many times, no matter what happened to the stock market, things always come back again. Yeah. So that's one thing to pay attention to. Things always come back again, no matter kind of what happened. So what I'm going to do, I am going to show you, where are we? Okay, so this is where we are right now. This is the SP 500. You can see that no matter what happened to the stock market, things always go up eventually. Yeah. So if you're a really complete beginner, if you don't know what you are doing, if you need help and stuff like that, you know that investing in the stock market is just the best thing ever. You don't want to invest anything other than the stock market if you want to make money consistently, because no matter it's World War One, World War Two, World War Three, whatever that is, no World War Three, but this is the internet bubble, this is the inflate this is 2008 financial crisis, this is the corona bubble, this is the inflation bubble, this is a tariff bubble. Now we are slowly climbing back up there. Yeah, slowly coming climbing back up. And so what's the conclusion? The conclusion is that no matter what happens, so I want to congratulations to a lot of you who really say that, I know, you know what, I want to decide to do whatever it takes to master trading and investing, as it's one of the best way to build your wealth. And if you're not doing this, um somebody else's, your pensions, your pension is guess what, your pension is investing? It's investing in stocks, but they investing in some really lousy stocks. They invest some in currency, they invest some in like in some diversity, like some really weird stuff. And so that's what happened. Okay. So but if you learn how to do it properly, you can scale up that big time. Yeah, a lot of people think it's risky. Well, you already did it. If you don't do it, the pension company is already done it for you. Yeah, if you're really scared, if you're really risky, as you said, for you can see no matter what happened to the economy. I said it many times, even though you invest just right at the top, you went back up. You invest right at the top, you went back up. Right at the top, you went back up. Right at the top, you went back up. It went right at the top. No matter what happened, if you're patient enough, eventually you will see some negative. But if you're patient enough, eventually it will go back up again. Yeah. So obviously we don't want to just put in like that. We want to, wait for some pullback. Okay. Extreme fear, especially because if you're able to wait for the pullback, you literally have how many years of discount? You have around 1 to 2 years of discount, 1 year of discount. Like here, January, it pull back here, you have 1 year of discount. So anyone who invested a year ago, if you are using our strategy, 8-step strategy, you have 1 year of discount. Same thing here. You might be thinking to get in right now. Normally, you have 1 year to 2 years worth of discount later on. It goes up, and then pull back, and then you have a discount again. So you know what I'm saying? So now let's go through the step by step, the week two training right now. The week one training talk about the PE ratio. Okay. So I'm gonna go to PE ratio straight away. So the PE ratio say that whenever you want to buy a stock, you really want to buy stock that is actually quite a low PE ratio. So you go on historical PE ratio, forward or PE ratio of SP 500. That's what I like. And then out of so many websites, I like this micros as well. And then there's another one called Yardney Research. They're quite interesting. So you will see like what is this? Actually, let's do this. The website I really like. Yep, it's probably this one. So it extended that a little bit. So don't worry about the extension. You can see that whenever the forward PE of SP, for example, comes down to, the line that we want, which is around 20, just right here in 2024. Just this is the winter, winter, winter rally. Okay, this is the winter rally in 2023. And then this is what we've got in the tariff crisis. Now it's went up here. Okay, don't worry about this extension. This is the extent to 2026, 27. Don't worry about that. It stops around there. All right. So what does that mean? That means that according to PE ratio strategy, week one, if you want to buy anything in your entire life, you always want to make sure it comes down to an average or really low PE ratio of the stock that you want. So how do you know? You have to type in Google. If you want to buy Meta, look at what is the lowest P ratio of Meta. Yeah, that's week one training. Okay. So at the moment in time, it's just show that it's not a right time. We are here at the moment. Okay. Let me show you. We are around here at the moment. For those who are new, I'm just showing you this new student, September time. It's very, very high. It's not on time to buy in yet. Okay. Warren Buffett is not buying yet. Bill Gates is not buying yet. Elon Musk is not buying his own stock yet. Nvidia, Jensen Huang, where I saw him on Monday, is not buying his own stock yet. He went to this tech event in London, just in Olympia, Kensington. You know, and yeah, and he's not buying his own stock yet because it's very expensive at that moment. Okay, so that's based on step one. So if you want to buy anything, make sure you actually buy at the lowest PE ratio. Yeah, and I said this before the last time you can. But anyway, so like Meta, for example, Meta historical P ratio. I talked to Alwin about this as well just a couple of days ago. A lot of our students make a lot of money when, like for example, Meta really came down to the lowest P that it has ever been, which is just around 10. This is like here. Yeah, if you go all in here, you have made 7 times your money just like that. Easy. Yeah. And yeah, so what does that mean? That means you have to be vigorous in finding stock that is actually at the lowest PE ratio. Chances are if S&P 500 is not at its lowest PE ratio, your stock is probably not going to be at his lowest PE ratio. Okay, so normally this is the mother and father and sister of many, many stocks. If this guy, SP 500, comes to the lowest point, and if you choose some proper stocks like technology stocks that's actually related to SP 500, you're going to make a lot of money as well. If you even if you close your eyes, you pick any random stock. It can be Robinhood, it can be anything, and you're going to make a lot of money. Yeah. Now let's go to the next one. Um, So that's week one. Week two, we talk about some technical analysis there. Okay. Week two, talk about a technical analysis. Let me just show you. So week two, the step two, we want to draw your trend line. For those who are new, you want to draw like that, a really beautiful trend line just like that. And then you want to wait things to kind of come back down a little bit. Okay. And week one will give you some screeners as well. Not only you will want to find some stocks that's in their lowest PE ratio, you want to make sure that they are they are the EPS is growing, the revenue is still growing, their guidance is doing well. Guidance is on the week four video. If you haven't done week four, don't worry. So that's what happened. Step number two, we draw our trend line and things like that. So it's saying that, okay, if it comes back all the way down here, it's a really, really fantastic place to buy. So a lot of your pending order wants to be at around this level. Yeah. If you book a one-to-one, we will go through to talk about how you should buy each of these stocks and stuff like that. A lot of our students, what's this sound? A lot of our students get into this beautiful Tesla stock when Elon Musk and what is his name? Donald Trump argue. One talk about the bill is very expensive, one wants to increase the United States debt, one wants to decrease it. So they argue big time. And for those who've been into my training for quite some time, especially when you've done your one-to-one, we kind of ask you to put some pending order. If you remember, the stock used to be really, really, really high there. You used to go to 271. We already asked a lot of our students to buy just around 200-ish. And then finally, they argue again, they argue and then it comes back. One day it dropped 14%. And based on our strategies as well, we know that 280 is kind of a nice time to buy. Why is it 280? Because it's kind of like a nice support line just right here. Yeah. And yeah, so some students did put some pending orders in the 280 and they things got triggered and it went up again. So it's not to say that it's going to continue to go up massively. We still think that there maybe is going to be a really nice correction coming in before our winter rally. Yes, historically, winter used to do really, really well. Now we're in a very tricky situation because in the seasonality wise, we don't really have like China and this US talk going on at the moment. It's crazy, Like every day they talk about the talk. Every day they have something kind of going on there. So and the market keep rallying just because of their talks and stuff like that. Yeah. So historically, last year we don't have the talk. We don't have the China talk. Last 2 years ago, we don't have the China talk. We didn't have the China talk. Anyway, so coming back, step two, you draw a really beautiful trend line. I hope you remember how to draw your trend line. Just make sure three criteria, a lot of touches, less steep, and stuff like that. Yeah, cool. The next one that we're gonna talk about is our support line. So if you look at the support, you can see that support is anything that is actually bouncing. So this will be a good bounce. Yeah, this will be a good bounce. And you will see that we are approaching our resistance lines as well. I don't really like to draw a resistance line, but there's a chance that it might go up a little bit higher and then there's a pullback kind of going on there. Yeah, there's a resistance, there's a support line. Saying that if it comes down all the way to five something, you kind of want to go all in. A lot of people are worried about, oh, what if it never comes down here? It will always come down eventually. Yeah, it's just a matter of time. And step number five is your indicator. So in terms of your indicator, the only signal that you should have your indicator is a buy indicator. So when it crosses up, crossing over up, you want to buy. Don't care about the crosses down, sell signal. Never, ever, ever you know, as I tell you, there's only two times you should short at the market. I told you before in the past. The first is during March time. The second one is during July time. Historically, seasonality wise, there's only two times you should short the market. If you short the market on any other time, chances are you're gonna go bankrupt. Okay, most people lose money on the market because they're trying to short the market rather than trying to buy the market. What I normally do, what our millionaire students do, what a lot of our students just want to guarantee to make money do, They literally being very patient. They wait for the market drop and they put a really nice pending order and they make a lot of money just like that. Warren Buffett just make money by buying stocks. Most of the richest person in the world that you see, they make money by buying stocks. Yeah, rarely selling stocks. If you really, really, really want to sell them, you want to prepare to lose. Okay, you want to prepare that. Okay, I'm gonna sell for £100, £200. You're gonna be with 50 quid. You're gonna prepare to lose that. But your majority of your wealth, write it down. Majority of your wealth, if you want to be financially free, you want to quit your job. Majority of your wealth comes from you being very patient and buy stocks, not from selling stocks. Selling stocks is really to test your strategy, is to test that, oh, you are learning some stuff, is so that you're being patient. Yeah, so that you're being patient, you know. At this moment in time, a lot of our a lot of our successful students or me myself, we don't really spend a lot of our money on shorting stocks anymore. We spend like 5 to 10% of our money shorting stocks. Yeah. Or what if the stocks keep coming down and stuff like that? Or what if the stock crash? Then you celebrate because you get to buy at a really, really cheap price. Yeah. And we talk more about that in the high level trainings as well. Now, the next part we're going to talk about right now is we're going to talk about yeah, indicators. Okay, indicators. This hence I say that we have a correction. We no longer, when it crosses down, it's no longer a shorting signal. Yeah, it's just about buying. When it crosses up, it's just about buying. That's it. If you want to make money, crosses up on stocks, it's just about buying. But if you're doing something else though, if you're doing like some weird like forex and stuff, minutely chart and stuff like that, maybe shorting is fine, but on the stocks, that's kind of what happened. So that's based on that. Let's go on the next step. We're going to talk about what happened right now. You can see that we are very, very approaching the time of um. Let's have a look. So let's go on fear and greed, and then we go on this, what is it? This whale doing, this sentiment report doing, this NAIM doing, and this market valuation doing. So we are still in the greed stage at the moment. Please remember on the week 2 training, we tell you what to do. Greed stage, you actually normally do nothing. Neutral stage, you even do nothing. Fear stage, you get ready to buy. Extreme fear, you buy on leverage. Remember the graph we told you, we show you? I'm reminding you right now. Yeah? I repeat, greed, you really do nothing. Neutral, you actually do nothing. Fear, you get ready to buy. You can buy some index. Extreme fear, you can use some leverage. Remember, we have a really nice, beautiful graph I showed you before. Let me show you the beautiful graph. Where is that? Little noise. What's going on? Java, you have to send it on Zoom. Just on the chat box to host and panelists so I can see what you're on about. Let me show you the beautiful graph that we have on our training real quick. Let me just remove this plate. Where is it? Let me see. I should put it as my wallpaper, actually. I recommend you to put it on your wallpaper. This is actually what you should be looking at every day. Not sure where's that gone. Anyway, in the week 2 video, you should see that really, really beautiful letter showing that each stage of the economy, what you should be doing. Print that out and memorize it. Okay? If you just use that, well, no one can actually stop you. Cool. Let's talk about the next step right now. The next step. The next step is okay, the same thing here as well. We The two things that's very important. The first one is the put and call ratio. The really good time to buy is just there. Yeah, the right really good time to buy is just right there. Market volatility is also the same. The really good time to buy is when the market volatility reached around 40. Okay, so that's kind of what happened. And you want the open insider to cross. The last time we crosses here, you see around here, in April time, 25th of April, lots of students make a lot of money, and it's a lot of small cross 18th of April here. Crosses means a lot of CEO of the companies are buying as well. So that is actually just on 18, yep, just around kind of around there and there, and it keeps going higher and higher. I'm going to tell you right now, the crosses over is a very, very strong, very, very easy signal. It rarely happen, but if it's happened, no matter what you do, you have to take a leap of faith and just put your money in, literally. You just have to put your take a leap of faith and just click the buy button if the open inside the crossover. Yeah, sometimes some of these things, a lot of the times in trading and investing is about taking a leap of faith. It's literally that. It's not about you over analysis paralysis, being scared and stuff like that. Yeah. So, and how do we aim the bottom here? Out of so many strategy, the put and call ratio right at the peak, volatility index right at the peak, extreme fear right at the peak, and then an AAIM report, these ones as well, come to the really nice bottom line on the 16th of April. So those are the peak, really a good signal. But you can see that we are at the peak here. Every time we're at the peak here, it did show us that we are there's a correction kind of signal here. You can see, and we are waiting for that. So we are very overdue now, just because Donald Trump keep doing these like tariffs. Donald Trump is actually single-handedly. Every time he's on the news, he keeps saying market is gonna go out. Literally every time he's on the news, he say that. I don't know what he's doing, but he's very trying very, very hard to make sure the market actually goes up. It's insane. But very, very good for a lot of our students. I'm very, very happy for my portfolio. A lot of students are very happy for their portfolio if they already bought them. But sometimes, as you say, we really, really like the market, to go down just because so that a lot of our students, able to get rich ones. Um, Cool. So that's the first part. The second part that we're going to talk about is going to be our seasonality. Okay. Seasonality says that, let me have a look. What is this? So we've seen that. This is why I said there's only two times you should short the market. The first time is February to March. The second time is September to October. Yeah, and you want to short something that is EPS revenue especially that's going down big time. Okay, that's the only two times. Here we have some corrections, really nice correction. Here you can see we have a little bit now. If I'm going to be really, really precise with you, probably I'm going to be there's a coming down, but the really coming down is at the end of the month. Yeah, kind of like the third month, third week of the month, we have a small kind of like a pullback kind of going on just right there. Can you see a double bottom just right going on there. Yeah, a double kind of bottom kind of going on, kind of the third week of the June. So we are not there yet. Yeah, so these are very, very small kind of like corrections kind of going on. Probably gonna be big. Let's see the talk. Let's see what they're on about and stuff like that. Yeah, but a real one, you can see this is kind of the real one. The real one is kind of like that. But this is also really nice to give a lot of people opportunity to get into the market to catch some fish. Yeah, especially if you done a one-to-one, we ask you to put some pending orders in some really, really great stocks. The next one we're going to talk about is your Bitcoins as well. Bitcoin, you can see a lot of your crypto. Historically, the black line, you can see that the second week things started to get a bit tricky then. Let's see what's going on with this Bitcoin. Bitcoin started to get a little bit tricky the second week of the month. So we are almost approaching some interesting time. Yes, we are now at the peak. We should be at the peak right now because we are there right now. So as it goes on, you know, this might be some really nice correction kind of going on just right there. If Trump doesn't do too many things, to pump the market like that. Cool. So that's kind of what happened. Now let's go to look at some of your trades. So look at some of your homework. If you send your homework, send it Just copy and paste Javier your link on the chat box and you will be fine. So this is on the week 4 video right now. Let me see. Let's see. Awesome. Awesome. So let's ask, let me see. Is this even the spreadsheet though? If you've done your homework already, that name of the chat box so we can see your beautiful homework. Now, a lot of the homework that we given in the past, as you said, we are still waiting for the really nice correction. If you look at June carefully, the seasonality of June, let me just show you, is actually, let me show you US 500. It's actually quite kind of like a sideways kind of thing. Yeah, the whole 2 months has actually been going sideways. If I show you June, so June is kind of like that, literally. It's a sideways kind of thing. Okay. Now let's have a look. Um, what I'm going to do right now, I am going to go into homework. Is this my homework? This is on the spreadsheet. What is this? Oh, let's have a look. We have Autodesk. It's a bit late, but let's see. Um, Beautiful. So now this week 4 now. If you don't get it, that's fine. But I'm gonna at least you know how to read it. So let's see. We want to know whether this is quarterly, or annually. So let's see. The non-GEP is 9.34, up 15% revenue, up 15%. So they're very similar, up 15%, up 15% as well. So, you know, um, could be a good buy, Autodesk, because it's the same. It's an up 15%, up 15% is the same. It's the same. So it's not a buy, it's not a sell, but because the market goes up, so it should be doing like that, Autodesk. Yep. It's just going sideways like that, you can see, because it's the same. 15% up. This is in February. Now in May, they talk about 15%. So very similar, just going sideways like that. We have Foot Locker here. And then you see this is what 1.35, and there's no guidance going on here. If they have some words, even though they don't give guidance, sometimes they give some words. So those words can be quite useful. Yeah. Foot Locker. Mm. If there's no guidance kind of going on there, um, let's look at Foot Locker. Yeah, it's going sideways as well. Uh, Investors are waiting for some nice things. Health equity, let's see. Mm, this is what, 12%, 10%. Obviously, it's less than last time. 1.28 revenue is the same. Net income 164, net income increased a little bit. EPS increased a little bit. Yeah, you wouldn't short this guy. What is this? Health equity. at all-time high already. Yep, it's at all-time high. What you can see is jump up like that and it goes sideways like that. So you bought it since when? Since January? Well done. Is it January? Have you bought a lot of this stock already? Cool. Nice. Well done. Let's see. Guide wire is going to be what? This is 1178 more than 1164. 187 more than this 17. Cash flow 255. So it's all increased a little bit. It's just a bit scary. It's at all-time high. Guide wire software. Yep, it went out like that and then it went sideways like that. You can see a lot of people are consolidating now. Oli bargain, this is 6.3. Let's see. We've got 2.2, 2.5, and 2.58. Very similar as well. 17, 14, and then yeah, very similar. Oli bargain. Very similar. Cool, awesome. We just need something that's increased big time, yeah? Well done, Alvin. Let's look at yours. So June 10, beautiful. Let's see. So let's see, flat to low single, low down low single to single digit, low single digit 0. You can see 0 0.5, 0 0.1, 0 0.3, and now they withdraw the guidance. Designer brands. Sometimes we need a little bit more words, but okay. Designer brand, let's see. Wow, crazy. They withdraw the guidance and the stock went down 20% today. Yeah, no guidance for people. Crazy. Let's look at this Boston Scientific. I think we talked about that the other day. Let's see. We need the latest one. Okay, we talk about a lot of that. Really, really good. We just need a little bit more. Um, let's see. What is this? 6th of June. 660,650. Very similar. 180,145. A little bit bigger. So it should be a buy for this Manchester United. Manchester. Manchester United. Yep, a lot of students bought it already on what day? Let's see. On the 6th of June now. So let's say you skip this 6th of June, 7th of June, you have done it like that. So Manchester United has always been going down and then suddenly it went up. Let's see why. So 140. So this is 125 to 125. Previously was 140. Obviously it's bad the last time, so it dropped. And then 635. Reiterate is the same, so that's okay. And then 140 in line with the previous guidance between the range of 125. Okay, in line is fine. And then 145 is fine, it's the same. Guidance to be at the high end of his previous, that's okay, it's still in the range. And then suddenly raises his EBITDA. So this is probably the very first time Manchester United actually increased their their guidance. They actually increased from 145 to 180. That's quite a big increase. You can track it. Why is Manchester United making a little bit more money? Aims to finish at high end of Titan revenue guidance. So let's just put it on the watch list just here. Manchester United is a okay buy after the pullback. Okay. Let's check the PE ratio of this guy. This is PLC. PLC a bit tricky. Manchester United forward PE ratio. looks like it's negative. That means it's losing money. Football team is losing money. They paid the footballer too much money already. It's a negative P kind of thing. Okay. So the way we make money on this is really by looking at, really by plotting at least 5 years worth of graph. When we plot 5 years worth of graph, we ask ourselves, when we are at 180 last time, where is the stock? So it looks like when we are at 180, we are always higher. You know, 665 should be here. 680 should be higher than 165. Let me just show you what I'm talking about. Look, 650 revenue, the price is here. 650 revenue, the price is around here. So when we are 680, you should expect this guy to go a little bit on top of that. 180 is also higher than a lot of these numbers, 125. So it should also go a little bit higher than that. Yeah. So that's the reason. So I would say we're just going to put the buy signal there, but you have to plot the 18, plot the 5 years worth of graph to see last time at this revenue and EBITDA, where is the stock price for your target? Okay. Next one. Well done. Mm. So this one is 3.65. 3.65 is the same. Why are we doing the same thing? When it's reaffirmed, you forget about it, okay? We need the date. So this one is 0.11 to 1.32. Um, and then 1.3 to 1.32 is the same. So it's the same means stock chances not going to change too much. This one, let's have a look. 400, 380 is a drop. And then what? 105, 95. So it looks like it's always a drop as well. And the chances are where it's going to drop into. This is a short, if we look at it from 400 to 380, it's coming down. From 105 to like 95 is coming down. But let's see how big is it. Concrete pumping. Mm. It's not a massive big change if you look at 400 to 380. That's the only tricky part. Let's look at the next one right now. Now, let's go to the next one right now. The next one is, let's see, is this one Torrid? I think we done Torrid yesterday. So it's 95, 100 is a drops as well, but it might not be big. It's quite small. Torrid. Yeah, it's quite a small things. Okay, awesome. Javier, you want to send your track here properly? So very beautiful, this person. I don't know, be back. You're doing really, really well. I love it very, very much. Because you see 105, 95, very, very beautiful graphs. Really beautiful, but it's just that it's not a very big change. Okay, that's just the tricky part. Other than that, it's really beautiful. Let's look at this. Um, 200 to 225 looks like a buy. 18 to 22 is also looks like a buy. But unfortunately, it doesn't look big. Okay? That's just a tricky part. Graham Corporation. Let's have a look. Yeah. Can it continue to go up? Now, if you want this to break its all-time high, what needs to happen? You need to make sure what? If you want this guy to break its all-time high, you want to make sure the revenue, the EPS, all higher than the history has ever seen before for this company. Let's see if it is that situation. So this is 235 is definitely highest that we have ever seen before. So number one is true. Second, 22 million, is it higher than everything before? 18, 18, 18. Yes, it's also true. So it's saying that it's very likely chances are this is going to continue to go higher and higher and higher and higher. Yeah, that's what this is saying. But it's just that it's not big enough. Okay, and it's an all-time high. Very good. JM's marker. Let's see. So full year guidance is 8.5, full year guidance is 9.50. So this is like a drops as well. We will normally just short it like that. But we don't just short it. We want to see, write it down. You want to back test. Okay, when it dropped from 9.85 to 8.5, it's now 10% drop. Does it happen in the past? And when it happened in the past, what happened to the stock price? So let's have a look. 9.6, 9.7, that's fine. 9.8, 9.6. You can see when it dropped from 9.8 to 9.6, stock actually dropped. Let's continue. 9.45, 9.8. 9.8 is more than that. Stock went up. That's fine. 9.25, 9.45. Um, it's a bit weird there. 9.45, 9.25. Also a bit weird. So you can see that people of the same thing likes to trade the same thing together. If it is a bit weird, then we don't want to trade them. 8.55 net 9.2 supposed to go up. It didn't really go up. 8.75, 8.55 when it's here, it's supposed to go down as well. Didn't really go. 7.85, 8.6 is higher, supposed to go up. So this is a bit weird. SM's call. Don't even think this is a US stock, but good, well done. Manchester, nice. Let's see. Based on Manchester, June, July time, a bit weird, but you can see everyone has a winter rally just in November and December, just right there. Um, A, B, and B. Cool. So let's go Airbnb. Airbnb is an interesting one. Let's go at Airbnb one time because Airbnb, if you time it correctly, you can make a lot of money. So let's see. So this is 1.45 and this is 2. So this is 1.45. This is 2 billion. This is Q2. Now, because it's a new company, you kind of want to expect them to always double, but let's continue. 2 to 2.78. Okay, that's almost half of the double. And then 2.78 suddenly to 1. This is drop, isn't it? So it went down. And then let me just see the number 1.75. And then this is 2.35. This is higher than that. It should go up. Now they're talking about Q1 and Q1. That's a bit weird. We want the full year one. 3.3, that's the highest it's always have been. 2.13 quarter four, and then 2, and then 2.6, and then 3. Wow, it's quarter to quarter. It's very difficult to read. So quarter to quarter, we have to draw a magic line. Okay, let's draw a magic line right now. So Q2 is 2. So Q2, you have to go back to Q2 because Airbnb is a very seasoned thing. So it looks at 2.68 to 2.99 is an increase. All right. Let's look at Q1. 2.23 and Q1 is here, 2.03. So you will see that 2.23, 2.03 is an increase, but it dropped, but it's okay. Let's continue. 2.39, 2.13. So this is an increase. Maybe this increase is not so much, but let's continue. So when it's increased by like 0.2 EPS revenue, it just dropped. Like it just goes sideways or drop. 3.67. Let's look at this. 3.67. We're going to compare the Q3, which is here. 3.3. It's like 0.3 billion, a little bit, more. So it's still okay. Not too, not, it's not like double or anything. Because last time it used to double big time. 2.99 Q2 go back to 2.68. Wow. It looks like Airbnb has a lot more a lot more data that we didn't show on the graph here. Yeah. Looks like there's a lot more data Airbnb that wasn't shown on the graph here. So you start from 1 billion and then you go to 2 billion and then go to 3 billion, 4 billion. Look at the revenue has been increasing really nicely. Mm. Okay. Mm. Awesome. A lot of these shorting stocks that as long as the revenue and EPS go down big time, you will eventually come down. But the biggest money is made when we found the one that's doubling and there's funds for buying. All right, let's look at Palantir real quick. Okay, Palantir is a very famous thing. I want to make sure you're giving me guidance though. Is this guidance? We are raising our guidance. Okay, I hope you're giving me guidance, yeah. All right, let's do the guidance here. I really hope you're giving me guidance. Let's see. This is what? 934401. 934. Okay, when you give me guidance on the graph, please put the full year. Don't give me quarterly guidance. It's very difficult to read when it's quarterly guidance. But well done. Well done for doing it. Okay? Full year guidance is a lot more powerful. So that's what you want to be given us. Quarterly guidance is too difficult to read because we have to like draw the graph, go back to there, go back there, go back there. But let's read it together to see if we are able to read it. Mm, so let's go to income. 23 is the same, so it should be the same. 22 is the same, should be the same. 22 is the same, should be the same. 23 is the same, should be the same. 27 is a bit higher now, so it should go up a little bit. It did. And then what? Revenue 474. Oh my God, what should I look at? Let me start again. Let's start with revenue 360, 385, 418, 443, 470 is an up. 474 is this up is very small. So after this, you expect things to go down because the revenue up is very small. 5503 is also very small. 528 is bigger than that, so it's time to pump up. 553 pump up even more. Revenue what? 599 pump up is also up. Mm, let's see if you know when is the money start making. 555, 612, that's fine. 649, 697, 769. Okay, so you can see the revenue used to be like, 500, 500, very, very similar, 525, like always plus 20, 30 only. And then suddenly they plus like 100. From here onwards, they literally plus 100 million in their revenue. Okay, from here onwards, kind of, this is 50, this is 30. Yeah, from here onwards as well. That's for Palantir. You can see money doesn't lie, the graph doesn't lie. If the company makes more money, the graph is going to go up. You're going to make a lot of money. So let's look at the income. Income used to be 54, 78, 91, 118, 135, 184, 196, 200. So a lot of them are increased as well. The previously they didn't really give us a lot of income, but it's okay. 20233 and then 298 and then 39354. So the income really started to pick up. Here from here is like 50. So you can see the income started to pick up. Here from here is 20. So it's always 20 in the past. Yeah, so this is 20. This is 20. And then yeah. So it's always 20, 20, 20, and then suddenly it doubled to 50. Okay. 135 to 196 is 50. So you'll be like, oh, This is like never happened before. You probably be buying it here. Okay. In fact, a lot of our students did bought that. Yeah, because they start to see the income started to be a bit different now. Because look, income, yeah, 54.78 is 20 difference. 78 is 91 is 20 difference. 20 to 118 is 20 difference. 118 to 135 is also 20. But 135 to 196 is 50 million difference. Big companies cannot increase their revenue like that when they start to get bigger and bigger. But this guy still gets bigger and bigger. And then 196 to 20209 is around 10. And then but the revenue will still increase big time. Hence, you can see the market actually just goes down, going sideways a little bit. But then 30 million increase, and then this is 60 million increase, and then this is like 80 million increase kind of. And then keep going, and then we are kind of there. And during this time, if you have the graph, you will see Palantir has been going crazy. So people ask whether you should buy Palantir or not. You just have to see. So this is all the thing, the graphs and stuff like that. When the revenue, everything started to go up massively. From 2 it went to 13 or so, seven times your money, just like that. So if you want this to continue to go up, you want to make sure the revenue increase quite big and everything's as well. Yeah, like income 4035, they double, they increase quite big. Let me see right now. What is it doing? May 5th. 4235, that's okay. 934 to 958. Wow, it's also quite good as well. Yeah, it looks like it might continue to climb. Very similar to Nvidia. Nvidia last quarter earnings report, if you draw the graph, it's also quite a nice earning report. Next one. Well done, this is beautiful. Um, but it will be more beautiful if it is a full year guidance, I think. Let's see, what is this? This is hymns. This is hymns. Hymns also one of very, very popular ones as well. Really, really powerful one. A lot of our students also make quite a lot. Look, 12 million loss, hymns, the hair loss thing. 9 million loss. They lost 9 million loss more. You can see when he lost 9 million and lost 9 million, it goes back to exactly where he was, 9 million. And then now rather than losing money, EBITDA is 0 million. They are no longer losing money. We call it the turnaround company. Losing money company, suddenly not losing money, started to turn around. So it started to be more, 3 million, 4 million, 10 million, 14 million, 22 million, 30 million. These are all a buying opportunity. Okay? As soon as you see that 0 million, you kind of like, oh, getting ready, losing less money, losing 12 million, losing 9 million, and then 0, and then 3, 4, 5 going up like that. Let's continue. By the way, being a good trader on the week 4 training just means that you are a good analyzer of a company. All right? You know how to analyze a company. Whether it's a private company, it's a public company, you're analyzing them. 4, 10, 14, 22. Wow, this is huge. Look, we always plus 6 only. This is plus 4. And then suddenly we plus like 8 like that. Yeah? Never done this before. And then plus 8 again. And then 35, and then plus 5. And then 35 to 50 is plus 15. That's where the money making comes. Can you see EBITDA? I'm talking about the EBITDA right now. And then 50 to 55, just right there. So this is a bit decreasing right now. Okay. So if you want it to continue to go up, 55 has to be at least 70 if you want to continue to go up big time, the EBITDA. Okay. Now, now let's look at the revenue. Revenue is 175 to 200 is 25. And then 200 to 17, and then 43, this 30 roughly, and then this is the 20 as well. And then, okay, you can see the revenue started to jump up big time. Can you see, guys? This is plus 8 in EBITDA, plus the revenue also plus 120. We never seen this before. We never seen hymns and hymns increase so big before in the history of the earth of the company. So you know that at this point, what should you do? That in the chat box. On May 6th, what should you have done? You should have bought a company. You're absolutely right. because the revenue and the EPS guidance has increased like we never seen before. So it did. It will continue to go up. Let's continue. And then it goes to 35. And then this is like what? Now the revenue started to be a bit weird now, a bit drop around 20. And then the stock get punished a little bit, and then it continues suddenly plus 120 back. Sorry, 100 back, 100. Exactly like what before. And then 60 million back. Yeah, so you can see here is the time, and it continues to go up really, really nicely like that. But how do you have a conviction? The question is, how do you have a conviction to know that when you buy here, you buy at a nice price and you never sell? That's the question. How do we know that we should be buying here 392 to 392? The revenue is plus 120 million and the EBITDA is plus 8 million. How do we know this is a place we should be buying and hold it like it's our last chance on earth? How do we know that? Now, there are a few ways for you to know that. The first way for you to know that you want to make sure the company itself actually makes money. At this moment in time, hims and hers comes up with many, many nice, beautiful products. So it's actually because the companies is actually making money. A lot of the companies, when their revenue double, they double because they acquire a new company. Write it down. When a company's doubled in EPS and revenue because they acquire company, is not as powerful as when the company itself makes more money. All right? Just write that down real quick. One of the things that we have for our students who also make quite a lot of money on GoGo. Yeah, make quite a lot of money on GoGos as well. If you remember, GoGo actually double in revenue, double in EPS, everything double like that. So eventually the stocks also double, also went up big time because when you look at the guidance, it doubled big times as well. Um, and this is actually less powerful. It is because Go actually acquire a new company. Obviously, if I'm a Tesco, I buy another Tesco. Obviously, I have two Tesco. Obviously, my revenue is gonna double. Obviously, my EPS is gonna double. This is not as powerful as you having one Tesco and suddenly you double your revenue and suddenly you double your everything. All right? It's very, very different. Cool. Next one. Yeah, just write that down real quick. Doubling a company, make sure it's actually because the company double, because it come in new products and stuff like that, but not because you acquire a new company. So it started to go out nicely, really nicely. Now, 530, 530, 55, 65 million. You can see that we're almost there. We are almost not going to keep going higher and higher now. Just depends on the next earning. If the earning guidance is huge, this is how you make money, guys. Um, so that's the first part. The first part is you realize that a few strategy here. On a higher level training, we talk about the turnaround strategy. You can see this from negative, 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 negative. There's a turnaround suddenly become positive. So that's a first sign. The second sign is that you kind of want to ask yourself, are you using Hims and Hers product yourself? Okay. If you look at Hims and Hers products, just so you know, all of this, like all these chews, like hairspray, hair fall stuff, and then they have everything. They have like everything that people need. Let me see. What do they sell? They sell hair. They sell, everyone needs their hair. They sell sex, sell ED, premature ejaculation, they sell skin as well. People spend money on their skins as well. So they sell like these three stuff and they make so much money. It's crazy. Yeah. So if you use any of these product and you'll be like, okay, am I still paying for them? And then you understand a little bit about things and stuff like that. Yeah. So that's the first part. But how do you really have the conviction to hold it long time? One of the ways to have conviction to hold it long time is that you can look at the CEO of the company, maybe buy the stocks as well. Let's have a look. ChatGPT today is down. Show me show me the exact time when insiders or CEO or officers of Hims and Hers company bought back their own stock. Let's see if anything comes out. So you can see this guy, board of directors, bought it at what? Um, 26. When is 26? Let me see. 26 is probably just pretty just at the bottom here. Crazy. When someone can buy at the bottom, why are you scared? Can you see? They buy just at the bottom here. That's okay. If you can buy right at the bottom here, you want to celebrate. This board director, Christopher, also bought it at where? 17 only. This is even lower than the bottom. This is what? May 21st. Where's May 21st? Okay, this is 17. 17 is around here. Okay. Someone also bought it just right there. This is when the turnaround happened, guys. Let me show you where's the turnaround. Um, where is the turnaround? Where's the turnaround? Chris is asking what's mean by A, B, and B. A, B, and B is a company. It's just the name of a company. What am I doing? Okay, I'm trying to show you the really beautiful turnaround. You can see the beautiful turnaround. People are buying just right at the bottom here. When 12 million has been losing less money, zero, incredible turnaround company, and then started to become positive, positive. By the way, all companies are like that. Facebook is like that. Amazon is like that. And Meta is like that. Netflix is like that. They are a healthy company always show things like this. Okay? This is negative. They lose less money, become positive and positive and positive like that. Yeah. And if it doubles, then it doubles even more. Next one. Mm, why do I talk about this suddenly? Oh yeah, when is the insider buying? So that's what happened. So this is bought at 17. Other insiders have been mainly that's about it. Okay. So to give you some conviction. So the conviction you have to go back to the eight step that we have. You really to have the conviction. And some of the conviction really comes from you reading the earning guidance, doing our one-to-one, book for your one-to-one and stuff like that. Yeah. Doing earning guidance, read the transcript, and you have a lot of a lot of conviction to like hold them. Normally, we only um and the PE ratio. Let's have a look. Revenue, EBITDA. I think they're still losing money. I think losing. Hmm. New companies, you can't really do PE like that. Okay, because it's a very new company. Hims and Hers historical forward PE ratio. Let's have a look. Mm-mm-mm. When we started, it's always high. You can see 100. Oops. It's like 100, 25 will be perfect time. This is 25. You can see 25 is really nice for a new company to get 25. This is 2023 September. That's where the whole market crash. I wouldn't say the whole market crash. This is where there's a winter rally. That's on 2023. Yep, the P is around 25. Just right there. Okay. Cool. Today's around 48. Yep, if he comes back to around 30, that would be a really nice time to buy this company. All right. These are all this what the stocks that we're discussing right now is one of the stocks that, you know, what a lot of our students has been actually holding. Cool, well done. Keep it up. What else do we have? Let's see, what we did anything. Well done. The rest are doing really well now. Who else did the homework? Jagger, when are you gonna send me your link? Just copy and paste on your chat box, please. Mm, let me see. If you text, just text me a little bit. What day is this guy? Okay, let's get Sarah a little bit. Oh, where's the guidance though? You need to plot the graph, Sarah, when you're watching this. Um, confused. Okay, let's look at this. Um, so 6.827 is a buy, and then 0.310 0.15 is a drop. So that's not good enough. Concrete pumping, some people done it. Manchester United, Graham Corporation, some people done it. Chris Power, let's see. This is a yen, so 300 to 38 is a Japanese company. Let's avoid that. Cool. I think we're almost done now. Well done. So as you said, now is really a good time to be really, really being patient, really hone your skill, really choose some really nice companies to buy, really nice at a really, really nice price. And sometimes bad news sells papers. Yeah, really bad news sells papers. So that means some stocks where temporarily, if they have some bad things that happen that has nothing to do with the ability of the companies to make money, then you're kind of absolutely fine, especially when it's just a short-term thing. Yeah, cool, awesome. That's it for everyone today. Today we just kind of found ones as well. As you say, we are still waiting for the market to kind of correct itself by the third week of June. Then we probably have a lot of things to go on, but we never know because Donald Trump one day can just say something and create incredible things happen to the market. Like last week, they just fight with Elon Musk, and those our students just get on the trade with Elon Musk. So yeah, so things are very simple. So how do you get prepared? You have to now making money is not one day you wake up and let's make money. It's not really like that. Making money from things like this is about prepare. It's like you go into a competition, you're really preparing. Sam is asking what? MODJRNGRG. What's that? I watch big whales are buy. I bought demo plus it skyrocket in the week in the few days. Well done, Ego. I'm very, very happy for you. I watch all the big whales are buying. I bought on my demo account, MODJ plug NRDJ is skyrocket. Well done. You're doing really, really well. So the argument it affects the market. Yeah, everything affects the market. But it's already over because when the argument happens, Tesla stock tank 20%. And today it went back up 20% in 1 to 2 days. Crazy, isn't it? So you need to put the codes into your trading platform to see what stock. Well done. Let me see what questions do you have. How long? One company who have been doing 20% 3 months and grow up. I missed that. What stock discuss? Airbnb, it was a B, IG, Foot Locker. Well done. I've done the homework. Okay, let's look at Camilla. Let's look at Camilla homework. Let's see. Let's see. A, B, C, D, F, G, H, I, J, K, L, M, N. Beautiful. Let's see. Look. Well done. Well done. So let's have a look here. Revenue 958 is the same. Well done. 103,119. So it's very similar. It would be nice if the revenue actually increase in a nice way. 745,758. 1684 to 5 and then 5 to 5.25. Okay, it's definitely a buy. It's not like a big buy. Progress software. Let's have a look. Yeah, it went up like that. Definitely a buy because you can see you wouldn't have shorted it because a lot of things are going up. The GAAP is going up, the revenue is going, like GAAP is 5 to 5.25 and stuff like that. but it's not like huge, huge, huge. Well done. Let's look at actually I should start from the bottom, isn't it? Wow. Well done. Really good. So JM and Smart Cut. Let's see this. So a lot of people do this. So this is what 7.259 and then become 8.75 capital reserve, effective tax rate. What's the reason they decrease things like this? JM Smucker. So now if you want things to continue to go down even lower than that, that just means that you need to make sure what? You need to make sure this whole thing is here. Okay? You need to make sure this whole thing actually went down like that. So you want to back test to see what number this is. Then we can short them. Let's put it on. JM Smucker. SMUKER. Check previously what is the EPS and everything in the past 8 years to see where if the stock will go down lower. All right? Because you see, um, if the price is right now here, 94, you want to see all the way back. So, for example, the price we saw now is to see whether it's dropped too much or not. Look, the price now is 8.5, yeah? So 8.5, look back into the last time. Where is it when it's 8.5? It's here. Okay? So this is what? November 2022. So you go back to the chart and you look at what is November 2022. So November 2022, November 2022. So it's probably just around that. So we are a bit drop a little bit too much according to this EPS, if your graph is plotting the right way. Next one, free cash flow 875. So go back to the time, free cash flow 875 should also be higher than that. Um, yeah, that's about it. So this drop looks like a little bit too big. Adjusted EPS is 8.5. That should go all the way back to what? 8.5 should be 2020, 22. Let me see when is that. Vertical 2020, 22. Yep, just around there. Hmm. Is there a way we can put on the earnings out? Event, company earnings, put it out. Just to see the graph in a proper way. Okay, let's go through this together. 8.2, 8.35 went up this time. 8.55 went up. 9.2. Yeah, this is why I say it's weird already because 9.2 supposed to go up and actually went down. 9.4 supposed to go up, it went down. 9.25 supposed to go down, it went up. So this is why it's weird. Okay, some companies are like that. I don't know where this companies is from, but it's some companies is like that. Some companies they are weird in a way because when we backtest them in the past, they don't really work nicely. Let's look at the next one. This one, 2.2, 2.24, this is a little bit up. 2.44, 2.94 is up a little bit higher. So, okay, let's read this. Forecast expecting 2.94 compared to its previous forecast 2.44. Analysts expect to be 2.61. So it looks like a good news for this. So let's buy this. Okay. The tricky part here is that look, the first one is that the analysts expect to be 2.27. You only get 2.25. That's not very good. And then 2.61, you get this EPS higher. So this is one is good, one is not good. So overall should be okay. MongoDB, you wouldn't short this. Let's see. Yeah, it just jump up like that, and then it's doing that like that. It's very normal for us to want to buy this straight away because you look at 2.24, 2.25 up, 2.44, 2.94 is up. It will be normal for you to buy this, but write that down. If you want the stock to go up, you want what your actual guidance to be higher than your previous guidance and also higher than the analyst guidance. In this case, who is the analyst? Analyst surveyed by FactSet is your analyst. Analyst is 2.27. Your previous guidance is 2.24, and the reality that you gave me is only 2.25. So you are higher than 2.25, you're higher than this, but you're not higher than the previous analyst. So in order to make money, you want to surprise the analyst and you want to surprise everyone else. Okay, in order to make money. So for that, we're not gonna buy just yet. Shoe zone. Okay, cool. Well done. Which number? If you already have a group, shall I give you my number? We don't do groups, guys. We don't do groups here. If you want to join our groups, we might have a group, but in reality, we don't do groups. Anyone who created groups will be kicked out from the team. Sorry about that. Just because groups can be very, 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 very tricky because the best way to make money is actually by because sometimes when people make a lot of money in the stock, people can get a bit FOMO trying to get into the stock without anything to sell. Cool. Awesome. That's it for now. Hope you learned something new, and I'll speak to you very soon. Take care now.